So for the last 3 weeks, I've been selling daily puts on the SPY. In this video, I just want to give you a little bit of a breakdown of what you could expect if you were to sell daily puts on the SPY, and is it really worth it? How much you can really make, and how this is going to really be the jumping point or the foundation for what I want to start doing every single day in 2025. So here, guys, is a list of all of the trades that I've made starting back on November 21st. We can see across the way, I just have the number of trades that's going to help me figure out some averages, the date, whether it's call, a put, or a roll, the strike price, expiration, my delta at open. Everyone always asks me what my delta is inside my Discord. What I opened for, what I closed for, if it was green or red, how I closed it, was it a buy to close, did it expire, things like that. The weekly total that I got for that particular week of trading, and then an average weekly total as I go through. Now, this has kind of satisfied my day trading itch. Right now, I am still swing trading platinum, but really the SPY is what I'm focused on right now as far as my daily trades. I do wheel VTI, and this is that VTI that going back to 11.7. So I will do a video on just VTI and what it's like to wheel an ETF. But really, this is the jumping point for in 2025 when I want to start selling daily puts on the SPX. All right, now to do so, you need a large amount of capital. And frankly, I just do not have that capital right now. So I am building up my capital to be able to get to that point, right? And I want to say that first and foremost, because even to do daily puts with the SPY does require a little bit of capital. And some people either whine about it and say how lucky people are, or some people work, they put in the time, and they build up their portfolio slowly and without a ton of risk. And then as they get to different levels, they can start trading different things. You will notice I do not trade credit spreads. If you have not seen my last video, at least go read the comments. It's been frankly hilarious. But these are all going to be cash secured and naked puts depending on the account that I'm using. So here's the long and short of it, guys. Today was the first red day. I've really been waiting for a red day so I could show you what a roll would look like on this. I'm not going to blur things out. Like, you could screenshot or get out of here. Like I said, I want this to be a quick video. But some things that I really want to bring to your attention first is my average delta at the open. You can see when I first started doing this, I had very small deltas. I was kind of trying to figure it out, feel it out, see how much the SPY was moving, because I do used to day trade the ES. So I kind of have an idea of how the ES would trade. And I just wanted to get used to how the SPY would relate to the ES. And then as soon as we got there, I'm looking pretty much at between 0.17 and 0.20. That's really the delta that I'm looking for. And that's really the only metrics I'm using right now to set my strike price as I adjust through this. So I'm not looking at anything else. I'm looking at some technicals, but not a ton. What I'm finding is that the technicals that I'm looking at really align with that 0.2 delta that I'm really looking for. So over the course of 18 trades, and you see this is 18 trades, but it's really only 15 rows. What that means is that I took one contract for these single days, and then where you see 6, 7, 8, 9, I started taking double contracts, which is what I'm going to do for all of December. And then where I'm at, I'm so close to being able to trade the SPX, I'll either jump up to 3 contracts, maybe somewhere in the middle of this month or early in January 2025, to hopefully be able to be doing this every single day with SPX. So that's why you see multiple trades for this one day. And the delta 0.18, we've seen strike prices from 587 all the way up to 606. As we know, the market's been ripping. This is really I think the third red day on the SPY in the last 3 trading weeks, which is, it's awesome for investors. But I mean, and actually, let me stop there and say this, because this is important. When the markets are ripping the way they are ripping, this is very easy. This is why I like to be on both sides. This is why I like the puts here and I like the calls of VTI. Because right now, VTI, I've just been rolling and I can't keep that thing out of the money for the life of me. Where this has been almost boring. Like, I set the strike price and I'm like, all right, the market's going to rip and this thing's going to expire worthless. If the markets do reverse, it's going to be the switch where my calls are going to do great and the puts I'm going to have to give some daily management to. Another question people ask me inside the Discord as far as management is concerned is how much time do I spend really looking at this? Guys, really no time at all. The market opens at 9:30. I get in, I see the updated options chain. I look at the strike prices and what the market did overnight on the ES and kind of get a glimpse. Takes me about 3 minutes to set the trade. Takes me another minute to open up this spreadsheet. And then I get on at about 3:15 when I get home from my day job, and I manage it where I either close it, say it's going to be expiring worthless, or roll like I had to do today. So probably under 10 minutes of work. And think about that as 10 minutes of work worth the amount of money that I'm making per day or per contract. Some more things to note. The first couple of days I was in like that wheeling mentality. So I bought to close every single day. This also bought to close came with extra fees, right? So in Fidelity, I have to pay about $1.60, I think, per contract in and out. So letting it expire worthless was actually a good thing for me. And it was very easy. Like I just mentioned, the markets are ripping right now. So it was better for me to let things expire and save that a little bit of fees, especially if you're going to be doing this every single day. There's 280 something or 250 to 280 trading days. You do $3 a day on that, that could add up as well. So the first week was just 2 days. I got $55 just feeling it out. That next week was also a short week. I bought to close the first day, and then I just let things expire and kept the entire premium. We had Thanksgiving, the market were closed. There was a half day on that Friday, so I didn't want to trade the volatility, not the volatility, the volume, and it was just a low liquidity day, so I just didn't want to mess with that. Plus, I was enjoying time with the family, but went up again to $91, which raised my weekly average to 73. Then once December started, I jumped up to 2 contracts, which essentially doubled how much I can make. And that was my first full trading week. So I got $280.93 and $142.63, bumped the average up. Now I will say, I don't think 280, I don't think I could say, oh, for an average week, I think that's going to be where I'm at. I got very, very lucky with 3 expired worthlesses and 2 buy to close. So I'm not even going to think that 280 is where I can be. I assume I'm going to have to buy to close some of these as they start to move into the money. So I'm thinking right now, I think $250 is going to be a reasonable amount of money that I can make. So back to that 10 minutes per day. So that's 50 minutes, about, just under an hour. Call it an hour. It would be less than that if I didn't have this spreadsheet. So $250 an hour to be able to do this. I mean, who wouldn't want to take $250? I know there's going to be people like, oh, this is so much work. It's really not a lot of work if you know what you're doing and you're doing it over and over again with one asset. Because like I said, you just learn the asset and you know how it moves. I knew at 10 o'clock this morning that I was going to be buying to close this thing just the way the SPY was moving. Now, the last thing I want to talk about is this roll and also why I didn't just accept assignment. So you can see today 19606. 0.23, just like I like to be, maybe a little bit high, but the next one I think dropped down to like 1.1, so that wasn't good enough for me. I got $56 for both contracts, and this thing went into the money pretty quick. So I have 2 options in that case. I can either buy to close, or I can buy to close and then immediately sell to open. That's all the roll is. Or I could have accepted assignment of those shares, which in this case would have been 200 shares of the SPY. Now, when I'm trading SPX, I'm not going to be able to do that because there is no exchange of shares. It settles in cash. But the reason why I did not, because people like, Brad, you like to wheel, right? So why didn't you just accept those shares and then start selling covered calls? So the answer simply comes down to margin and leverage. These 2 trades were traded in this one trade with 2 contracts was traded in my Fidelity account, and that is a margin account. So this was a naked put. So to take assignment on this, it would have been $60,000 times 2. That would have been a $120,000 assignment. Now, in most cases, if I had that, if this was a cash secured put, I definitely would have taken that assignment and then I would have just wrote calls against it. But to have $120,000 worth of margin at and not knowing could this thing continue to dump and I won't be able to sell calls and recuperate, it's easier for me to take a $71 loss here and then open it up immediately and get $147 back at the exact same time to still keep myself green. That is the beauty of rolling and just remembering that, because people want to criticize, it's not the wheel unless you take assignment. Sometimes it doesn't make sense to take assignment, and this is just one of those cases. So that's really what happened. So far since the 21st, I've brought in a net of $503.49. This is after fees and commissions, What that averages to is $27.97 per contract. You can see up here that is the sum divided by how many trades that I've made. 18 trades, that got me to there. If I was to multiply this over the 252 trading days, that would give me $7,000 and an additional 11.8% on the SPY on top of anything that it would gain in capital gains. And as I've always mentioned, whether you're wheeling or just selling in options in general, 1% a month is a very, very good basic metric for you to use. I know people will use volatile stocks and get way more than that. And I would love to make a video about all those people, but I think if you are a conservative guy like me, you can expect to return 1% if you know what you're doing. All right, guys, you know I love to sell options. And like I said, I just wanted to give you a little snapshot. If you do have any questions about selling options, about SPY, or about what I plan to do with SPX, please let me know down in the comments below or jump in my Discord. I'll leave that link down in the description below and we can talk in real time. I'll catch you guys on the next video.